Good evening, good day, and happy Wednesday. How are you today? Please give me some okay if you can hear me. Wonderful. Thank you very much, guys. So, how are you today? How is the mood, the weather, the energies? I hope everything is good. Good to see you. And let's begin. Let me just make sure we. Why I can't? Oh, it's already on. Okay, so you see my screen, right? Good. All right, so let's go over our report and see exactly what kind of things we are dealing with. Since yesterday, important thing to mention is that we are in very sensitive conditions in terms of the political events. All the rumors and ongoing speculations between U.S. to China and U.S. to Russia in terms of Syria attack, etc., etc. That brings lack of stability, lack of confidence to traders, and could cause zigzags move, which means that the directions could change suddenly within the same range of prices. And it's very important to understand that on such periods, and they happen, that's out of our control. That's not news like non-farm or anything like that. We better always keep low risk. And as I always suggest, when you have these periods and situations, simply double your patience. Patience is anyway one of the most problematic things. Just a second, one here. One of the most problematic things for traders, right? But in such cases, we have to double that and wait, simply wait for the setups to happen. And be able to listen to the market and listen what the market is telling us in terms of what to do, what not to do, and when. And this is exactly where I would like to discuss about the dollar yen. Remember what we said yesterday, guys. Now we are long here. We are looking for the buys. And yesterday we got a beautiful buy. That was the live situation that we were talking about, right? This one. It was beautiful. It was running beautiful. Everything good. And then boom, we had this situation yesterday live. Is that a divergence to trade? No, because two candles rule not in play, we don't really have to pay too much attention to. Is that a divergence to respect in trade? The answer is yes. Why? What's the difference in that case? Simply because, and it's very important to understand that, if you go scroll back to the 4-hour chart, according to the 4-hour chart, we had double cycle, which we could even break into triple. 1, 2, 3. Triple ascending, right? And in that case, the correction should be towards 38.2, maybe even 50. This is something to remember. Why? Because when you are in a trade like we were yesterday, and in that situation, when you get yourself the divergence ticking down, and you got yourself an engulfing and harami right on that place, this is a moment where you first of all move stop loss to break even. Not talking about cashing out partial, yes, no, that's individual, but that's exactly the situation. That's also what I said yesterday. That's exactly the situations where we first of all have to make sure we don't lose money to the market. We don't give the money back to the market. This is what we call listen to the market. Why? Look what happened here in this situation. 1, 2, 3. 1, 2. I'm not talking of two candles rule here. Of course, it's not perfect for sales, but I'm talking as a warning sign. That's a big warning sign from the market that it might go and develop a bigger ABCD, which would not change nothing of the bigger picture, but go and trick on the short term. Do you see that, guys? These are exactly these little things that create a huge difference. You heard me tons of times saying don't get married with your idea or your position or your trades or your thoughts or your prediction or your expectations. Right? If you listen to the market, you always have the control over your money. If you simply blindly go with the things as they are, who cares? Whatever happens, happens. Then you expose yourself to these emotional places. Now, there is nothing wrong in terms of letting it run statistically, right? Like, okay, so it neither fails or success, right? In that case, where will be the problem? If it fails, what will happen to the majority of traders? They will give up on the next opportunity, right? They will simply give up on the next opportunity. The next setup it will do, like let's say assuming something like that, just for example, here the traders already will not be. Okay, so this is exactly the little situations that create huge differences in our trading performance. This is the first one I wanted to show and explain. Okay, when we see something like that, we have to remember how to deal with that. If you are trading pure statistics, no problem, but then you have to be on the second chance because you're dealing only with statistics. And from my personal experience, dealing with statistics require much more advanced approach, which most of traders simply can't have and don't have because of emotional barriers. It's hard. When you fail once, it's hard to convince ourselves to go and try a second time or a third time to play the statistical game. It's very hard on the same cycle, on the same pair, right? And the complete majority would simply avoid it. So in order not to fall into these emotional traps, we better listen to the market and what it says. Okay, and in that case, I always suggest the easiest part is to manage your positions, because trading statistically purely for risk reward, for whatever happens, has some disadvantages. So this is the first pair I wanted to discuss about. Now, it doesn't change our view. We are still after buys, and that's the best zones for us, the 38 to 50, according to the double or the triple cycle. This is our best place if this long will actually go and kicked. Very simple. We will be looking for the setups. It doesn't change the big picture, it just changes the timing. Okay, now this is the first one. The next one which we have running and going is the Aussie versus the franc. Now this one we are involved with a couple of days. This is one of the positions that is running. Now, on that place yesterday, this was the exact place where we discussed about move. First of all, move to break even. Why? That's exactly like the dollar yen. Because from that case, it could make bigger double wave and then continue. It could do a range and continue. When you have signs against you on the short term, it does not anyway means that your long-term plan is wrong. It just means maybe the timing on the short term is not the best. That's the only difference. Okay, so in that case, what do we do with the Aussie franc? Our long is still ongoing, but, and here comes a little but, what do we have to pay attention to? this developing triple that could block us on the 161.8, which is found not too far away. The next cycle level is slightly higher. So we have two critical zones here, this and this. One of them is going most likely to be the stop zone for the short term for the Aussie versus the franc. Okay, and this is the place basically where it's best to start and cashing out. 1 hour chart starts to show the signs against, 4 hour chart starts to show some signs against. That's the place. 1 second. Where exactly it will happen, we will have to follow the trendline breakouts. Currently the last trendline developing is this. As long as we are above it, theoretically the bullish trend is beginning. There is the daily range, which means we can also go for the previous top. Here, right? Or the double cycle of the 4 hour chart. Daily is the same, which is this one. Okay, same, basically the same zone. All right, so once and if the trend line is broken, we can discuss about short-term correction. And currently this is the last trend line. What it could do is easily something like that, and then we have improved trend line, right? But as for now, at this market condition, that's the trend line that we have right here. As long as we're above it, the bullish pressure is on. The cash out suggestions for the longs is here and here. All right, guys. So Aussie franc running. Pay attention to the warning signs that we start to see and to the levels that we start to see. Okay. Costas, in terms of the money management, nothing is wrong. Every trader can deal with things differently. Someone cash out at 1-to-1, someone break even at 1-to-1, someone going with 1-to-2, someone going with different management. Nothing is wrong as long as you are comfortable with what you are doing and it's proven for you yourself, not for anyone else. That's a very important thing to understand. Every approach has its advantages and has its disadvantages. The most important thing is when you have signs against, do not give the money back to the market. That's the most important style and thing to understand. When you have the signs against, whatever you do, don't give that back, especially on the short term. Why? Because it's much more noisy. Next ones, we have the cut pairs going, and basically this is where I would like to show and remind you guys the critical levels. Remember, we are coming very, very close to this area. The first one was broken, no divergence, so that's why we are kind of continuing straight to the point. This is the critical area for the dollar CAD, where most likely we also have an amazing low here, where most likely the dollar CAD is going to stop on the short term and create pullbacks. Short term, it doesn't change our long-term view. Okay, and that goes immediately to the Euro CAD, Pound CAD, and the rest. Take a look here, guys. We are right on the 161.8. No, we don't have false break, higher highs on or trendline breakouts. No, sorry, that's not the last trendline. This is the last trendline, the big one. We don't have any reasons yet to go long. No two candles rule here for a false break. Nothing yet basically is in the game yet. So the only thing we have is level, divergence developing, which means the level become tricky. What could start to happen here is false break. That could be alternative trend line, horizontal. So we can start to see some attempts for false breaks and higher highs. At the moment that happens, we get ourselves the chances for short-term retraces to the upside. side. Only when we get the conditions. We are not there yet, so the bearish pressure is still on. Okay, not completed, but we definitely need to pay attention to this level, because where the traps start to happen, next to the cycle levels. And this is the level of the short-term cycle, the surrounding of the 155. Next one would be, well, the pound cut is basically the same. 1 to 1. This is the level of 261.8 for the special cycle that is developing. This, and it could actually be a triple, or it could go and turn to be a special later on with doing double cycle here. Currently, it's dancing on the 161.8. Again, no higher highs, not 4-hour chart, not 1-hour chart. No trendline breakouts. There are no reasons yet for the buys. We definitely need to start to pay attention to this zone. And if the buy sign not coming in, this is going to continue lower towards the 176, 177. Okay, so as for now, the plan was bearish and remains bearish, unchanged, but start to pay attention to these levels that it's reaching, approaching, and starts to create some suspicious signs. With the political and the geopolitical events we are exposed to, it could become tricky. And if it's tricky, we don't trade every setup. We wait for the best setup. Okay, the best technical setup. That's all. Exactly, I agree with you, Dorbright. On levels of cycles, when you are facing cycles and signs against, you better be careful. And that means, very simply, now there is a bullish divergence developing, right? So would this 1-hour chart bearish hidden be correct, yes or no? Who can tell me this, guys? Would this bearish hidden would be correct now or no? Exactly, no. You have the signs against you on the 4-hour chart. How to deal with that? Or get your two waves on the 1-hour chart, or get a bearish hidden on the 4-hour chart. And currently we have none. So what could happen in such situation is exactly this. Spike, rally, spike, rally. Almost impossible to find a reliable setup, technically speaking. And if that's the conditions, we simply don't force. But it's very important to recognize these conditions, right? It's very important to recognize these conditions, because that's where it all starts from. When you know what you are facing, you know the risks, and you know what to avoid too. Okay, it's very, very, very important. Very, very important. All right, pound CAD. Next ones, Aussies. Aussie franc we discussed. Aussie. Where is my Aussie? Pound Aussie here. Pound Aussie. Now, pound Aussie is bullish. Bullish as long as this low holds. As we were talking yesterday, this trade we said wrong because of a big stop loss. We were looking to improve the entry, right? Which simply means improve the risk reward. Then we get ourselves a divergence here. Now let me ask a question. Is that a better entry? Yes or no? In terms of trendline breakout, is that a better entry for a buy? Yes or no? Of course not, says Costas. Who else wants to try? Is that a good buy? Yes or no, guys? Let's start with the facts. This is a trend line. You have a divergence there, you have everything there, right? But what's the problem on such case? Entry, stop loss. What's the problem is that? Stop loss not improved. Still very, very, very big. Second is that the first move is stuck inside two candles. Suspicious sign. When you have too many suspicious things, you simply avoid that. Why? Because that's the way of Mr. Market to tell you the conditions are not good to trade. As simple as that. I agree with you, Kostas. It's very tempting, especially if you don't know these traps, and this is why we're doing these live rooms, to talk about the traps. I always say that when the conditions are so good and the market just goes with whatever you touch, you don't need me. On that situations, everyone makes money, right? That's exactly where you can see everywhere bragging around, I just did 200, 300, 1000 pips, blah, 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 blah. These conditions, you don't need me. Whatever you touch will turn to be success. The conditions that I can contribute from my experience are the conditions of the traps. Because on these conditions, that's the places where the majority of traders fall. And the only reason I can help here is because I've been in all these traps. Trust me, I've been on all these traps too many times. I know how they feel, I know how they look, I know how they smell, I know where they lead. That's the only reason I can help with these traps. And in the trading profession, in dealing with the markets, the most important thing is not how to enter the trade, how to avoid a trade. And this is the hardest part. I believe you would agree with me, guys, right? So pound Aussie is not a good entry. Now let me ask you a question. Is this a good trend line? Yes or no? Well, in terms of divergence, there is divergence. Ending part. Not of this low, definitely. But no two candles. Thank you very much, guys. No two candles. Nothing here could be counted. The answer is no. That's not correct. So, pound Aussie, with all the wish, no trend line to be traded. The only way to trade anything like that is just to attack levels, scalping levels. That's all. That's the only way. Like support resistance, like trend lines, like whatever the other cases are. Is that something I think is smart to do? My answer is no. Such things are simply best to avoid. With all the seduction, with all the potential, with all the wish, with all the idea to be involved, this is a story that the market tells us. It's not ready to do nothing. Or in other simple words, the big money is not there. They are not interested in this pair. As simple as that. Euro Aussie was our next pair to the trading list. We are after sells. So basically we prefer here short-term sells. In our case, sells could be done in three variations, basically. After we had the triple cycle on the 4-hour chart, 1, 2, 3, we can face here, 1, a range, 2, two waves, 3, bearish hidden divergence. The last divergence against us is on the 4-hour chart. So we must get a bearish hidden divergence on the 4-hour chart, two waves on the 4-hour chart, or a range. on a 4-hour chart. Can we go now to 1-hour chart and trade? Who can tell me? Can we go now to 1-hour chart and trade that? Yes or no? For sales, yes, for sales. Exactly. No, we can't. Because the last divergence against us is on the 4-hour chart. We can't go to the 1-hour chart before we get the confirmation again from the 4-hour chart. We can't skip the time frames, right? So for sales, it's definitely not acceptable. Very good, guys. Very, very, very good. I love what I see here. Thank you for, first of all, participating in my questions and answering, and for taking the risk in answering. I know most people are simply shy, so thanks for that. Now I have a question for you. Assuming we are here, I remind you, we have no sells for the long term. We're only for the short term because this is only on the 4-hour chart base. Weekly and daily still did not reverse nothing. So at this stage, everything is short term. Assuming this could be a second false break inside a range, can we go and deal with buys here? Yes or no? With a bullish divergence at the end of triple cycle, at the end of second false break, can we go here and deal with possible buys short term? The answer is, I have 2 yeses. Who else wants to try? 2 yeses, 1 no. 3 no, 3 yeses, 2 no's. 3 and 3. 4 and 3 for yes. Okay. So the answer is yes, we could. The answer is yes, we could. We don't have anything against it if you think about it. Long term are not sells. So long term could still push higher. The 4-hour chart did triple cycle, 2 false break, 1 and 2. Sorry, 1 and 2. A bullish divergence is there, and this is a triple cycle by itself. And this is a triple cycle by itself. If that is the last double cycle we refer to, then the target of the double cycle also reached. So buys are acceptable here. How do we do that? On the lower time frame. And the most important thing is to remember that's an aggressive setup. If we are talking about aggressive setup, we are talking about what? Low risk trading. Or, in very simple language, not the normal risk we take, must be much lower risk. So if this is a range, the first condition is that the move down on the lower time frame is a cycle by itself. Is it a cycle by itself? Yes or no? Exactly. This is a beautiful cycle by itself at the bottom of the range. So what do we do in such case? The last trendline available, in our case, this is the last trendline available, this is the last divergence available. So that's all. My 2 cents on such case. First of all, this is correct. Aggressive but correct. So low risk is very important. And what do I personally do in such cases when I am involved with? These are the conditions where it's hard to get risk reward trading. So because we are against the higher time frame divergences, because we are against the cycles, and because this is an aggressive setup, to ask here double the profit and the risk, like 1 to 2 risk reward or more, is not smart. So that's exactly the cases where cashing out after 1-to-1 risk reward, especially when you get yourself signs against you in terms of bearish divergence, that's exactly where cashing out after 1-to-1 makes sense and become smart thing to do. Okay, so that's exactly the cases where I am cashing 1-to-1 or even sometimes earlier if I have the divergence against. In that case, this one paid the 1-to-1. Now again, this is aggressive entry due to all the conditions. Also, please pay attention that the breakout happened within the last 2 candles rule, which means the second leg is not even broken, maybe not even completed. So it's again very aggressive entry, as you can see. And on the 4-hour chart, we also stuck inside 2 candle, 1, 2. 1 plus 1 normally equals 2. In such cases, don't try to be a hero. If you are involved in aggressive trading, there is no problem with that. Just don't try to be smarter than the market. And when you get the signs against you in that terms of bearish hidden divergence, get out. It's always nicer to finish with the money in the pocket than the money in the market and you remain with the theoretical possible profit only, right? It's always better, especially when we are talking on aggressive conditions. So that's for the Euro Aussie, which is very important thing to show, and I wanted to cover that and explain this situation. Let me check my list. Aussie franc we discussed about. Okay, yen pairs, dollar yen we discussed, euro yen and pound yen. So let's start with the pound yen. Pound yen, we were waiting to see the second false break of the 4-hour chart. We got a second false break right here. Do we have 1, 2? Yeah, we do have the divergence of this place. Yes, 2 candles rule is in play. We got a breakout. So what do we do in that case, since this is a moderate aggressive setup? Why? Because we have no confirmations from daily and weekly. Nothing yet. So what do we do in that case? Double confirmation. What does double confirmation means? After the breakout happened, and it did happen, we are going lower onto lower time frames, and we are waiting for the second setup. Basically the second confirmation. What kind of confirmation could that be? 1, 2 and breakout, or exactly, thank you very much, bearish. Wow, why the color is different? Suddenly the color is different. Or a bearish hidden divergence. So assuming this could be a high, that will be a bearish hidden, then we can go and trade it. Always remember, guys, when you are trading in that situations and you have no confirmation from the higher cycles and divergences, what we do is double confirmation. Okay? That's a wonderful question, Dorbright. If the bearish hidden divergence is in one leg, which happen, of course, on most of the times, in narrow ranges, right? What do? On this time frame, it could be one leg, but then on the 15 minutes, it must be, first of all, a divergence to confirm. Second, 2 waves. Okay, it must be this combination. If you have a bearish hidden divergence, then we go to lower time frame and we confirm. If you have a double cycle and the hidden divergence on this time frame, then you don't need to go lower. Basically, you can rely on that, right? But it's rare. It's much more rare, right? It's less common. Okay, so that's for the pound yen. Euro yen also on classical zone. We are in potential double wave cycle and potential top of the range. So before we sell, we have to understand the cycles. And I want to remind you guys, according to the weekly, we are for sells. We required, because of the weekly cycle, right? We required a bearish hidden divergence on the weekly, which we don't have, or 2 waves retrace on a daily chart. Well, a corrective cycle on a daily chart, which we do have. No 2 waves due to the 2 candles, but yes, a range. And currently we are on the top of the range. So we are looking for possible sells. How do we do that? we need that trigger. Our trigger could be false breaks and lower lows, or trendline breakout. The last trendline available on this pair is this. Well, yes, no two candle rule nowhere in here in play. So the last trendline available is this. This is the trendline that has to be broken. Has to be broken if we want to start looking for the sells. Currently, we don't have anything. We are stuck inside the two candles here. So it will be very logical if the euro yen will try to do some clearances here. Okay, so the long term for us remains looking for sells. But for the question, do we have the setup already to go for sells? The answer would be not yet. So the short-term trading is still bullish. We can still see the pair dancing and playing around this zone. No two candles rule nowhere, not even 1 hour chart, right? Good. So this is for the yen pairs, and that's basically everywhere. Okay, it's Oz yen, Kiwi yen, CAD yen. They all the same. They all are basically the same. Okay. CAD franc, no problem. Let's cover this one. CAD franc for long term is bullish without any doubt of the weekly and the daily. The short-term levels are on critical 161.8, which will allow us the correction. In order to be able to go against weekly and daily cycles, we must get the confirmations. So we got the level. Voila. We got a divergence, moving average mainly. Voila. Now we need the setup. So our setup has to be double confirmation. Why? Because we are against the daily and the weekly. We don't have them with us. So we have to see the breakout, and then, and only then, we are looking for the retraces and sells. The retraces could be in two waves and breakout. The retraces could be in one wave or two waves and bearish hidden. So well, it will be even hard to see this here. Something like that. Okay, try to use my imagination here, guys. I know it's not there yet, but try to go with me. Let's say this is bullish. Huh? How am I in terms of creative future? Okay, try to imagination. This is a self-created MACD. That's the condition we have to see. Two waves retrace and or bearish hidden divergence, and then and only then we can go and trade Picasso. Well, thank you. More like Vlad Casso. So that's all. So that's the things we require before we allow ourselves go and look for sales. And it's very important to understand it, guys, because let's admit it. How many of you already thought to go and sell here? Let's admit it. Be real with yourself. Just admit it with yourself, okay? Because everything looks good, right? It was rallying so well. Let's make a sell. It makes sense, right? It's logical. That's how our logic works. When anything goes one way, it has to correct somewhere, right? Somewhere, sometime, it has to correct. This approach is exactly what is leading us to the early actions and, accordingly, to wrong decisions. So in order to avoid that, it's, again, important to understand in what conditions we are. Daily, weekly are bullish. The only thing that allows us for a possible correction is the 4-hour chart because of the double cycle and this kind of triple or special cycle. That's all. So if we go against the conditions, we must break. This is confirmation number 1. And double confirmation is wait for two waves retrace breakout or bearish hidden divergence and then a breakout. That's all. Before that happened, we can't even think about selling. Because who said it will correct? White will not make a V pattern, something like that, straight. Who said it has to correct, right? Just our brain. Just our brain. So remember, yes, we have the level. Yes, we have the divergence. Do we have a reason, a setup? No. And trading is always in 3 steps: level, confirmation, setup. If any of this is missing, you don't have a trade. Okay, so that's for the cat franc, which I was asked about. Dollar franc, we are after sales. Basically, what the pair is almost doing here, it would be actually very good if it could do it for us, is a bearish hidden divergence here. So we a bit more higher, and that would be very, very good sell opportunity. Currently, on the 1 hour chart, the 2 waves here are not in play because none of the 2 candles here is relevant. So I wouldn't rely on that. You see that, guys? 2 candles here. 1, 2, not broken. Here, 1, 2, not broken. So it's all straight at this stage. It can easily do something like that. New Zealand dollar, this is a very good one, and this is basically one of my last updates we have. Now, New Zealand dollar, we were after sells due to the weekly range and the daily cycle. What is happening as for now? So what we required was for the daily bearish hidden to join the weekly cycle, which we get. And the 4 hour chart, we require the trend and breakout, which we don't get. Well, at least yet. So after it breaks, we have the OK. But, here comes the little but. The problem with this setup is that the double wave correction is too deep at this stage. Yes, the daily still offers a range. Yes, we can still and might still be exposed to the sell of the top of the range here. But my problem with this bearish hidden divergence at this stage is that the correction up of this cycle is above all the Fibo retraces. Well, it's on 76.4, which I personally don't really work with for retracement. It's still correct though. No 2 candles rule nowhere yet and on the rally, so that's a very suspicious sign. So if the New Zealand dollar, that's what I'm going to basically say here. If the New Zealand dollar does not make the breakout now, let's say from here, and keep holding here, this is a very high possible call that the pair is going to the 61.8, which would be the complete top of the weekly range. Okay, take a look. Weekly range does not change here. It's the same zone here. Weekly divergence must go and might go and complete there as well. It will still be the top of the range. So if we don't manage to retrace and break this trend line on the 4 hour chart from here and keep holding these levels, that would basically mean that the New Zealand dollar would be acceptable for both directions and short-term continuation buys. At this stage, I still think that there are chances to hold this daily range, reverse, and break, but it must happen. If it does not happen from this level, and why from this level? Because this is the critical zone, the top of the daily range, and cycle from the 4 hour chart. If it doesn't happen, if it keeps holding above, it's going to be very possible for further continuation according to the cycle and showed. So as for now, I still prefer to look for sales, but it has to break the trend line first of all. Why? Because our combination here is daily bearish hidden and the 4 hour chart regular. The trend line must be broken. It's pretty far away from there yet. So New Zealand dollar, with all the wish on earth to get into sales, is simply still not there. Simply still not ready. And for buys, Well, as I just said, I would not really rush into that at this stage, but if it's holding these levels and refusing to go lower, then the answer would be simple. Yes, the market will want higher. Okay, John, thank you very much for your feedback. I'm very glad to hear you find the hidden divergences clear and useful. It's good. Gold and silver, boom, happened. So basically, what started from the 4-hour chart, false break, bullish divergence, and trendline breakout continues now into the longer view. Gold and silver both are holding back to bullish. And of course, all that is relevant as long as we are above this breakout, right? All that is relevant as long as we are above the breakout. According to the weekly cycles, we have the room higher. This was the 61.8, the 100, which would not be relevant for trading due to the fact the legs are not the same distance, but the level has to be respected for cash out. And please note that this 100 is also on the clearance zone of the previous high, which is here, right? This is where the clearance of the short should be completed. So as long as that is holding, the gold can go and push further. As long as the breakout holds above this flag range. Okay, same with silver, which is getting out of the daily triangle and range. Okay, now the rally currently is mainly due to the sensitivity from the political and geopolitical events, from the fear of attack in Syria, the US attack in Syria, and mainly from the fear how all that could affect on the relations with Russia. This is a very serious fear for the entire world. And commodities would be most likely the first one to be affected. Oil continues its current bullish momentum unchanged. 69.70 is the target for the long term. Gas is the only one stuck in no movements. Nasdaq is the one to start and pay attention to, guys. We have here triple double building up and the divergence building up. And well, that's all. No, I was. Why did I think we have a bearish hidden? No, we don't have a bearish hidden yet. So we have a triple double. This triple double magnet zone is here. And here. Two critical levels. First one is right here. Second one is slightly higher. Okay? We are there already in the zone. We must go below the trend line before we start talking about the sells. Nasdaq is one of the very interesting developments as it is right now. Start to pay attention to. I wish to get it from here in a breakout, of course, but as I said, it's only a wish, right? Dow Jones is less beautiful, but still in the same era. 1, 2. So this is the place, and this is the trend line. I want to see that here breaking, and then we can start talking about the sells. Not there yet, but they are building something to watch. Same with the DAX, which we will want to see the breakout after the two waves, and then we will want to see retraces and sell. And that's for everywhere. Okay, that's for UK, and we can take it deeper and deeper, but still early. Currently, we have a trend line here, but there is no trend line. It's one straight move. So hard to refer on that. This is the last trend line we really have. And in terms of cycles, this is the place. If that's our zone, it would be the magnet area for the UK. All right, so we are on a watch list for this, for things to happen. Ethereum versus the Bitcoin is one of the only things we have currently developing on a short term on the intraday. It's kind of developing here some kind of triple. So our idea is, for those who did not attack, is double wave and breakout. 1, 2, and breakout. And I say it's one of the only simply because the rest, Ripple, Bitcoin, Dash, they are still nowhere. IOTA, they're still stuck in smaller ranges. So that's why currently I have only one in the list, and this is the Ethereum versus the Bitcoin at this stage. That's all, guys. Anything on your list? Anything you would like to ask? Anything you would like me to go over? Because I updated all the things I wanted to update. All right, perfect. By the way, just want to remind you this part, guys. In trading, the market is 70%, which in reality looks like more sometimes, but 70% of the time is ranging, or in other simple words is trapping. 70% of the time. Only 30% of the time, which in reality feels much less, the market is trending, or giving obvious clear setups where everything is lined up. So until you bring yourself to this moment where you can learn to deal only with this situation when everything lined up, you will have to go and work through these moments where you deal with trickier conditions, right? Like when everything not is lined up, or trapping conditions. To deal with trapping conditions when you have signs against you, or do not have confirmations from higher time frames with you, the best thing in such cases, and you have to remember that, is double confirmation. Not because it's the best way to trade, just because it's the safest way to trade and give you the best possible timing. Remember the pound franc we were talking about? And remember all these little situations I showed you guys. How many traders would go and attack this trendline breakout, then this trendline breakout, then this trendline breakout, and then this trendline breakout? How many would already go and do that in the past? And that's all these little traps I refer to. There is no problem with trendline breakout, but since you are against the higher time frames, wait for double confirmation. So let the breakout happen and wait for the confirmation. And because you are waiting for the confirmation, you would avoid all these traps of break and immediate retrace, break and immediate retrace, break and immediate retrace. When you will be waiting for two waves retrace and or hidden divergence, that's where you will simply avoid entering the bad setups, those that are not ready for you. And that's all. Remember, to have the best performance, it's not only to improve the winners, because you cannot take more from the market than it's ready to pay. So because of this fact, it's mainly about avoiding the losses. You know, when your performance has 20 trades, 10 of them profits, 10 of them losses, you can't make more profits because that's the maximum the market can pay you. So the question is, how do you avoid 1 or 2 or 3 or 4 of these losses. And when you avoid a loss, your total performance is immediately reacting to the upside. And that's a very, very important thing to understand, because most traders think in order to make money, I need to make more profits. No. No. You need, first of all, to make less losses. And then these profits that you get would immediately balance it towards the upside. You have to remember these little things. Psychologically, they have the most powerful impact on your trading. Guys, thank you very much for being here. Let's hope everything would remain safe for everyone, with all those little crazy things happening between Russia and US right now, and in Syria. Hope for people just for the best. It's really, really crazy. So all we can do from our places is to pray and really hope for the best. So thank you for being here. I'll see you in the Telegram groups, of course, and see you tomorrow. Stay safe and all the best. Thank you for being here.